In 2022, Goldman Sachs declared that copper will be the new oil. So are we there yet? Gianni Kovacevic is an author and investor and one of the best known thinkers about the metal. Gianni, welcome to Kitco.
Nice to be back with you guys. It's been over a decade, I think. I visit periodically with Kitco and the family, so nice to have a nice catch up here in the start of the summer.
Gianni, it's important to talk to you because of copper's run. We hit an all-time high of 520 in May. What's underpinned the metal's recent run?
You know, running out of a commodity is not important until you run out of a commodity. Then it becomes really important. And I've been saying this for really since I wrote my book, and even before that, with all the research I did and all the study I did within copper. I will submit to people, and this continues, the people that push up these commodity prices to when they really go parabolic. In my view, these are speculators. These are not the end users typically. And what happens every single time when the price of any commodity goes up too radically, you could probably sympathize with oil prices. This happens as well. People just stop buying it. And then the trade is over. And then when they are no longer buying or speculating to the up and in fact shorting the commodity, they take the stairs on the way up, but they always take the elevator on the way down. And we keep going through this bifurcation. And if you understand copper, and if you followed it for over 25 years, we would know that copper was under $1 for a long time. Copper was at a point, a couple times in history where you lost money every single day. Half the producers in the world would lose money every single day, but you don't turn off the copper operation. So what has happened with this recent copper price run up is exactly that. It's speculators. And then the reason the price action stopped, and it always does, and it always will, is because the speculators stop speculating positive and they go negative. And there's no one else buying it because the real end buyer, and of course the biggest end buyer in the world, is China. China's become very sophisticated within commodities. I think they have the ability to smooth all commodity prices out. And that's where we saw copper go to 520, 530, the all-time high, and then collapse down. And now it's finally finding a medium level here at 450, 460. But the interesting thing is to follow aluminum prices, because the only substitute for copper, Michael, is aluminum. And it's interesting. When we look at it today, what's the price of aluminum? $1.10. What's the price of copper? 450, 440, 460. And there's a sort of a rough ratio of 4-to-1 or 3.5-to-1, the price of aluminum to copper. And when copper recently made that run past $5, what was the price of aluminum? $1.20, $1.25. The math is perfect. And that's this ratio we're going to have to continue to follow. And there are times where it won't even be the copper price. When aluminum prices are tighter, and they're maybe 120, 130, or shall I say, can aluminum prices go to 140? This is where you're going to see a more sustained, longer term, higher for longer price of copper. We will get there. That is where it's going. But every time when the price of copper goes to a new high or has sort of that last blow off up cycle, you can be guaranteed it's going to come off hard. 4 and 5% a day for 2-3 days. You could see a 20-15% correction in the copper price time and again. It will continue to happen.
Where are we on the fundamentals, Gianni? So we have seen the slowing sales with EVs, for instance. Obviously that we have these high interest rates, which are going to be making some of these large EV transition projects, how would you say, shelving them for a while. But we've also heard stories about that we see diminishing rates from some of the large copper mines.
Well, let's talk about EVs. The market is China. You want to follow what's going on in China. That is the market. It's where all the growth has happened, and people could say whatever they want, but across the board for these modern energy schemes or technologies, China's the leader. And so we look at the growth there, and the numbers are phenomenal. And then if we have 3 buckets for EVs, you've got the China market, which is the biggest, most important one, and there's growth, strong growth there. Now continue to be. You'll see the growth basically across all categories go from the bottom left to the upper right of your screen. Then you have the European bucket and the American bucket. And I think people are fixated, particularly in North America, why, following, news with Ford or curtailing sales of this vehicle or blowing out a model that maybe didn't sell so well. People get fixated by that. And that's not the future. That's not the growth. And then you get the European bucket. And this is going to be largely dominated by Brussels, where it is forced upon the industry that they must sell such percentage of their car sales. A little bit clumsy. It's not as, I don't think as successful as maybe everyone wanted it to be. Here we are. when the European manufacturers go back to work here at the end of August, they're going to start making the 2025 model year. And when I did my book tour in 2016, this should have been a far greater sort of sales situation for electric vehicles here in Europe, and it has not been there. But it is coming. It's millimetrical progress, and you're going to see also that growth from the bottom left to the upper right of your screen, and growth is going to be a real number, not 1 or 2%. I will submit to people, you're going to see this slow, painful substitution around 7, 8, 9, 10%. So when we look at the 2032 model year, it's going to be important. And that's where you're going to see the continued supply and take up, where hundreds of millions of lithium ion batteries and, in the near future, solid state batteries are going to be made. They're going to use these products, and we're still not in the recycling age. So demand is going to be there. You want to follow China. To a second, a lesser degree, you want to follow what's going on in Europe. And to a distant third degree, you want to be following what's going on in the North American market, because that is not where I believe we're going to see growth, particularly with the Trump presidency. They're certainly not going to push those technologies where Brussels and China are. And the automobile market, I can't tell you the exact number, but it's a pre-COVID. It's around 90 million units a year, Michael, 90 million units a year. The United States is a market where they make around 14 million cars, something like that. And they're buying, I think, 16, 17 million cars. So we're talking 13, 14% of the market. Don't be alarmed and don't follow what's going on there. But you're going to see significant growth across the board when you look at it in aggregate, in my opinion.
You mentioned batteries. We've seen a lot of critical minerals take a tremendous rise up and then fall back. I think of nickel, and then I think of cobalt as being some examples as well too. Is there any dangers that there can be some type of substitution or thrifting that could be happening in the copper space, Gianni?
Not with copper. Certainly the chemistry of a battery is going to change. There are thousands of very smart people and many hundreds of corporations working on batteries, the technology, the chemistry, battery management systems. We have Remats here in Croatia, which is a leader in the space. And that I can't tell you what will the chemistry of the average battery look like in 5 years. But what I can tell you, there is only one substitute for copper, and that's aluminum. And that is an application that, depending on the price, as I already suggested, that famous 3.5 to 4 to 1 price ratio, that will work for some applications, sort of the dumber, older applications when you're looking at a project. And I think when any company is doing a large electric works, they'll look at the pricing at that time for that project at that moment. But for a lot of these modern technologies, you cannot use aluminum as a substitute. Because why? When you're talking about a lot of these renewable energy schemes and a lot of these storage schemes, we're talking about the integration of alternating current with direct current. And in direct current with battery storage, we're talking about high amperage. When you're talking about high amperage, this is only copper. You cannot use aluminum in this equation. And that's done for a few reasons. One, it's amperage. The cables that are interconnecting to these batteries are very thick. They're thick as your wrist. That's copper. Can't be done with aluminum. And then you also look at ease of installation, because these copper cables are made in a very delicate way. You can bend a cable as thick as your wrist, and it bends like this in a very short radius. And so the worker can actually install these thick cables to handle high amperage very quickly. You cannot do this with aluminum. So countless millions of pounds of copper will only be used for that. And you also look at all the other sophisticated new technology type of energy schemes. This is looking at high efficiency. Aluminum is not a high efficiency solution. This is a dumb solution. This is a 70% less efficient situation than copper. So you will look at it for old energy schemes. Yes, copper's there and aluminum is there. But the pricing tells me that they will be tethered. And I can almost guarantee you this. You can look at the copper price, no matter how high it goes or how low it goes, and you are going to have a rough multiple without even looking at the aluminum price. You could go away for 2 years and come back, look at the copper price, just divide it by 4 or 3.5, you will have exactly the aluminum price. But they will go in tandem, and that ratio will continue to hold. But we also should not forget of an inflation adjusted number. Copper just went to about 520, 530. But when you look at it in the long run, on a US dollar, all things being equal, on an inflation adjusted basis, we are nowhere near the high. How much value has the US dollar lost since COVID? And in fact, since 2008, when all this creating of money has started. I will submit to people that if the 2011 all-time high copper price was 460, 454, we need to see a 7 or an 8 on the copper price to be anywhere near where we were in 2011. Lots of room to grow. It's going to continue to go from the bottom left to the upper right of your screen. But unfortunately, for people that follow junior mining, every single time when that copper price rolls over, you climb a wall of worry and the volume disappears out of the juniors. It will continue to be that way. And that's something. The euphoria will not last years. You can count it in months. So it's a few months of euphoria, misery, despondency, despair, climbing a wall of worry, and then the next mini mania occurs. But there will truly be a mania, a capital M mania, when the inflation adjusted price of copper is there, and that means you're going to see a 7, maybe an 8 on the copper price in dollar terms.
Let's talk about that other metal that is associated with energy transition, and that's lithium. Now, lithium's been in the doghouse after a spectacular run at the beginning of this decade, Gianni. We're founder of Lithium Bank, which is a direct lithium extraction business with a focus on North America. What's your thesis for higher lithium prices, and can DLE, direct lithium extraction, can that compete against traditional lithium miners?
That's a great question, and there's a few parts to break down here. So lithium prices went from about $10,000 a ton to 80. Okay, it had no business going to 80,000 a ton. Why it went there, how it went there, predominantly it's the Chinese market, so that was never needed to be there. So unfortunately, what that has done with speculators and investors and different people that participate in these markets, it's put the whole sector in a sort of, the prices collapsed. It's never going back. Well, the demand of lithium is going to be very strong for the next 20 years. Of that, I lose no sleep. So we're going to be more than 3 or 4%. I'm going to suggest to people it's going to be 7 to 10% growth every year for the demand of lithium. So the question is, what will the price of lithium be, and where's this lithium going to come from? A company, E3, just put out a PFS, and they used, I believe, a $31,000 or $32,000 price for lithium. And I think a lot of people have looked at that and said that, well, why would you use such a number when the current price of lithium is 12 or 13,000, somewhere there? You never see this. This would never work with gold, or this would never work with copper. The consultants and the consensus is still that if the lithium price stays at this level for a continued period of time, you will have no lithium. Lithium will just cease to be produced for many projects. Not all projects, but for many projects. And if lithium is going to grow by 7 to 10% for the next 10 to 20 years, that's not sustainable. That's a pretty good trade. So the consultants are saying, look, if we look at the next 20 or 30 projects, and they cannot be done, they cannot be built at $10,000 a ton. They're going to have to go to a higher price, or we will not have any growth in lithium production for a huge bulk of these projects. So when we did the PA with Park Place Lithium Bank, I'm talking about, we used a 26,000 a ton, and the consultants are saying this is the number that you can and you should input. So I'm going to submit to people that the lithium price is going to continue to grow, and I'm going to submit to people that we are going to have to see a lithium price around $25,000 to $30,000 a ton, and this is going to happen in the next 12 to 36 months. And this is what's going to normalize. And this is more like what you see with gold projects and copper projects, where they're using a price pretty close to where the 2 or 3 year average of the spot price is. The second part of this question is, where's the lithium going to come from? I believe, and I strongly believe, the big growth, where is the 7 to 10% CAGR growth rate going to come from? It's not going to come from the evaporation ponds of Chile and Argentina. It will come to some lesser extent from Argentina, probably less so from Chile. And it's going to come less so from these conventional hard rock mining operations, spodumene and what have you. I believe the speculation is in direct lithium extraction. This is where the industry is going to be going, because these projects are far larger, smaller footprint. They're energy more efficient. Some of these projects potentially have even a geothermal angle to them. A lot of them are in areas like we did the PA for Boardwalk. There's the natural gas that's already there. There's in Alberta, there's the potential to sequester carbon while you're doing these projects. So there's a lot of benefits there. Where this direct lithium extraction, I firmly believe that is where the puck is going, and that is where the growth that's going to satisfy this 7 to 10% CAGR growth rate. Right now, lithium in general is in the doghouse, and DLE, direct lithium extraction, because some people out there still believe that is not the way that the industry is going to go forward. Where I'm going to go with people like Exxon and Shell and the Koch brothers and many other industry leaders and technology leaders that are saying that is where we're going. And it works. Look at our projects. We just announced today the Copper Bank or Lithium Bank is putting in a pilot plant in Calgary. The Energy Minister of Alberta was there. We are not the ones that are going to solve the Rubik's Cube, but it's the bigger companies that are there. They're at the last baby steps. And Exxon, in fact, announced that they're going to be a commercial producer of lithium from DLE in 2026, 2027. That is where I think people should be speculating. And if you look at the value proposition on how these shares have just fallen out of bed, this is a speculation I think people will be looking at. And I think that's something that research should be focused, and people's attention should be focused.
Gianni, I'd like to take a macro question and kind of step back and look at things. There's a lot going on. We're recording this on July 11th, and Chairman Powell is doing testimony at the Congress right now. We have had wobbles all year that has happened out of China. We have the election coming up. What are the macro events that you're keeping an eye on? What could be the impact on metals?
Well, with metals, you're always looking at industry and the growth of global industry. And of these things that keep people up at night or keep people nervous, you have the tension in the Middle East, what's going on in Israel and in the surrounding area there. You have this ongoing, which frankly is people are perhaps a little bit bored of what's going on between Russia and Ukraine. That doesn't get the top headline anymore in the New York Times, which it did for one straight year. And these things they eventually come to an end. But is that derailing global industry? The headline in the Financial Times of London last month was that Europe, once again, leading supplier of natural gas for Europe comes from which country? Russia. So why? What's going on there? Quietly, people just, go back to business as usual. So with the driver of copper, we have on one side, you've got these new technologies, electrification, electric vehicles, and just really the creation, transfer, and utilization of electrical energy. That's going to grow. That's growing by probably 3 or 4%. And then you look at global industry, the GDP of the world. Is the GDP of the world, because of these macro events, is it going to go to zero? Is it going to be minus? Or is it going to be the average 2.5%, which is in general for the PhD, the economy, which is copper, you will have growth. Historically, copper has grown by around 3% for the last 120 years. I see no scenario where the growth of copper is going to be 0 or 1%. It's going to be there because it's tethered by not one sort of pillar anymore, where before it was always the global economy. When the global economy had a hiccup, the growth of copper or the demand of copper was lower. We have that silent helper day by day, month by month, millimetrical progress. As I've said 2 or 3 times already, it's going to grow. The creation, utilization, and the transfer of electrical energy is going to continue to grow. And the enabler of that is one thing and one thing only. It's copper. So people should not lose too much sleep at night, in my view, that for copper is going to be a good story. And I don't see where, other like a World War III situation. If that happens, you've got far bigger concerns than watching your junior mining shares are worried about what the copper price does. So I just personally, I don't lose any sleep at night that we're going to have some World War III situation between the United States and China or Taiwan. I think people are a little bit more measured on the bigger scene there, in my view. No matter what happens with the presidency.
Let's finish with uranium. I think we have to give it a mention, Gianni. You have been talking about the energy transition theme and working so well with lithium, with it working so well with copper. Uranium is certainly flying this flag as well, too. What's your thoughts?
Well, it is emission-free power, but it's useless for intermittency. Intermittency means when you have an area with wind and solar and you need to boost the power. That's done with natural gas because it's instantaneous. You turn it on in 5 minutes. You use it when you need it. And I think that where, particularly with the big growth markets, you have all that gas, the gas pipelines coming to China. China is the leader in all these energy schemes. It's the world's largest energy market in absolute terms. And they have sort of all pillars, but that just from a technical, running a power system, you don't want to do that with nuclear power, nor do you want to do it with thermal coal. You want to be doing that with natural gas as best you can. If you do have nuclear power, and there are, of course, those installations around the world that are already in place, and people look at from a junior mining speculator's perspective, it's really where's the demand of uranium going to come from? And uranium was in a situation where it was making a loss, in fact, for many years, and that was not sustainable. The uranium price had to go higher, and I would say the mania for uranium has already been presented to junior mining speculators. They should have taken profits. It went up a lot. You look at the bellwether, Cameco, it went from, what was it, $10 to 50? I mean, or even $8, I think, if you bought at the absolute low. You look at my friend Amir Adani's company, UEC, went from sub-dollar to $7, $8. That's a mania. That's a pretty good outcome. So is Cameco going to go to $400 a share? Does Uranium Energy now go to, I don't know, $28 a share? It's possible, I suppose, but that it's been presented to you already. And in the longer run, which politician gets the credit for instigating the creation and startup of nuclear power plants? Well, you can certainly talk about it. You can certainly attempt to permit it in the West, but how long would it take? Show me one county in one state in the United States that's gonna be accept the new construction of a new nuclear power plant. Show me one jurisdiction in Canada. One. Show me one jurisdiction in Europe where they're going to say, yes, we accept now. Even the Green Movement, build it. You're going to get friction every single time. So there's no politician that gets any benefit from that. Furthermore, they're not the one that's going to start it. By the time it's actually on, it'll be 15 years from now. Okay? And then look at industry. Which CEO of which power company gets any benefit from that? Who wants to say, you know what, we're going to do it because it's a good thing, and then where shall you build this nuclear power plant? And they're not going to be CEO 15 years from now when it's turned on. So I think it's a lot of lip service. Ultimately, that's not where the world's going to go. You're going to see the only talk of that is going to come from the countries that have an industry. We're talking about France, Japan, South Korea, China now, and of course, Russia. They would like to export this technology, and they will continue perhaps to do so. But where? Who's the buyer? Who's the champion? Which politician is the champion of this? Which big power CEO is the champion of this? So it goes back to the status quo, where you have the existing 450 nuclear reactors, many of which are 40 years old, 50 years old. How many of those are going to be turned off, forcibly turned off in the next 10 years? It's a real number. And then are they going to be offset by new power plants? The answer is no. They will not be offset. So is the demand of uranium going to be higher or lower 10 years from now? I believe it's going to be lower. That's my view, and I could be wrong. But this little mini mania has already been presented to junior mining speculators. I think the focus should be now on copper and particularly lithium. Lithium's the future. Demand's going to go from the bottom left to the upper right of your screen. And a company like Lithium Bank that weeks ago just put out the largest lithium resource in North America, one of the largest in the world, a PA with a pro. They got 2 different projects, lots of cash, 49 million shares outstanding, and is trading at 70 cents with 49 million shares outstanding and lots of cash. I mean, I would submit to people that's a speculation where plausibly there's a 10-bagger that could be there, and I think I would focus more on lithium, less on uranium, and certainly copper is sort of a mainstay in a portfolio, 10, 15, 20%, depending on people's risk appetite, but always consult with your investment advisor.
Gianni, thanks for doing this.
Thank you, Michael.
My name is Michael McRae. You're watching Kitco Mining.